Hello, everybody. Welcome to my new trade recap from last week. So, yeah, the last week was not that good for me. I just took the trades I needed to take from my trading plan. I missed also a few, but the trades I took were, yeah, just -1% and break evens, also almost break evens. So we will start with GBPUSD. So the first trade was GBPUSD. We had here a weekly bullish candle close, so we could look on the weekly for bullish momentum. We were also moving bullish on the weekly. We had this bigger bullish M. The only thing we needed to be careful for was this monthly bigger bearish W here, and we touched the monthly lower high here. So yeah, this was a zone the sellers could kick in from, but we had a weekly bullish candle close and a daily pattern here, as you can see. So we had here our shoulder one here, the head, shoulder two, inversion and shoulders for possible more upside momentum, like this, upside momentum. So we had that inversion and shoulders with a nice resistance in the head also, which makes it a nice supply and demand zone. So if you look on the line chart, you can see it more clear. Shoulder one, this head, shoulder two, and then we could go to the upside to the daily -27. But this we didn't do. We went break even on the trade. So my entry was triggered around the daily shoulder one zone, my daily white zone. So I went to the 4-hour chart, and what I saw was we touched our daily zone of interest. So we had here our first candle, second candle was a blue candle. This is a must for us. Then the third candle was a touch, so I could set my limit after the third candle close on the diesel and a few pips, 1 pip to the upside for rounding up, the round number to the upside, and then we went break even. I set my trade on break even around here. The 1% was around here. The trade went to the upside, not yet to my beginning of correction. And then we went straight to the downside with this big impulsive candle. So this was a break-even trade for me, followed by the plan. So the next trade was Euro NZD. So if I delete this here, like this. So I will go to the weekly first, weekly, like this. So on the weekly, what we saw on the weekly was we are still in this major bullish driver from the low here till the high. We have this very impulsive move to the upside. So everything between that is just a correction for possible more upside momentum. So this is corrective nature, could be possible corrective nature for possible more upside momentum. But what we saw was within that, we saw a pattern. So we saw here that bearish W here sitting with that lower high here, with this nice selling orders kicking in from here, as I look more to the left, and you saw this very big impulse to the downside. And here we had that also impulse, and now we could see also that impulse from there, because this was a nice resistance zone. And if I look more back in history, it was also some supply and demand zone here, some support here, not the clearest support yet to find. If I look at more to this, then it will be more clear. Then you have more support here, resistance, support, resistance, resistance. Here also some nice support weak, resistance, resistance, resistance. So more resistance was holding this zone down. So we had a weekly bearish candle close, we had that weekly bearish W. We could look on the daily for a pattern. So on the daily, what we saw was on the daily, we were still bullish. We had this bigger bullish M that could play against us, but I saw this pattern making above that bullish M. So we had this smaller bearish W here that could play out for more downside momentum till this daily higher low here, where the price could reverse back on. So yeah, I was looking for the bearish W, so I was drawing my daily zone at the beginning of correction at the highs, because there is the highest probability the price will come back to the beginning of correction here at this daily zone. I will just delete that. So I went to the 4-hour then, because we touched our daily zone of interest with a very big wick. So we touched this zone 1, 2, 3, 4. This was around 11 o'clock. This could be potential deceleration, but this was already invalid because the price went back till our higher low previous structure, so this isn't valid anymore. So what I saw then was, okay, we could make an head and shoulders with a break or without a break. So the price went back to the downside. We had here our wick here, the candle closed just below, so this was a head and shoulders with break. Then I wanted an head and shoulders with break here for our zone, the shoulder one here, shoulder one, sorry, like this, shoulder one here, this head, shoulder two here with the entry round number to the downside. So I took this trade like this, stop loss above this head. It was a big wick from the head, so maybe next time if I have some big wick of that, I need to see, okay, is it so big that wick? Then maybe you can not take it because this wick is is huge, very huge. So yeah, so I took this trade and then I was in a trade and I was minus 1%. It took me out. So then a little bit above, we reversed to our 4-hour minus 27, which is yeah, a little bit frustrating, but yeah, this is trading. This is the game we play, so nothing to do about it. This was around the trade to the daily TP for around, yeah, already 5%. So if I took 4%, maybe it was, yeah, maybe I was still in it. Yeah, I was just in it, but normally I take 5% on my head and shoulders trade around that zone. So this is why I was out. So this was a minus 1%. Then EURGBP. If I go to EURGBP like this, I will leave it like that. So if I go on the weekly, what we saw, we had here our inverse head and shoulders that could possibly play yeah, with us. So we had our Fibonacci from the low here to the high, and we had still to complete the minus 27 from the Fib, sorry, the Fib completion that needed to be tapped for then possible more downside momentum. So we had that inverse and shoulders. We went till these lows from the inverse and shoulders here. The bullish momentum kicked in, and then we had a weekly bullish candle close, so I could look for more upside momentum on the daily. So I went till the daily. What I saw on the daily was we had here this impulse, the first leg, second leg, third leg, fourth leg. We had the same highs. So as you can see, the wicks from this leg came back till this highs. So this is the same highs. So we expect the same lows. But then what I saw then was, okay, we broke this lower high with this wick. We closed below it. I drew my horizontal black line at the lowest wick here from this candle, from that second leg here. So the first leg, second leg, from the third leg. So from the low here to the high, this is the third leg. And I drew my horizontal black line at the lowest wick from that leg. And then I went to the 4-hour for the possible natural M fake out. So this is a fake out. This is a false break possibly from that higher low from the natural M. So I went till the 4-hour, and what I saw, I adjusted my 4-hour zone for the fake out like this. And then we had the first candle, second candle, blue candle, the third candle. Then on the fourth candle, I was looking for that diesel. I took this diesel, my limit was set, and then we could go on break even. So I think it was around 15 pips, yeah, 15 pips. We went on break even here, break even trade. So then, yeah, the trade was break even, and then I was looking for that bullish M. So this was a scale in trade because this was still valid. After a deceleration, I can take a scale in a pattern, for example, inverse head and shoulders or a bullish M. So I was taking this trade on back on this being of correction because it's a small bullish M, so I would like to take it on being of correction. So it was around also this kind of pips, 15 pips, and then we went out. Yeah, and then the trade came back, not yet till the break even, and then we went back to the downside here, and then yeah, it went straight to the upside. So yeah, this was the trade that was just taking me out here. So yeah, nothing to do about it. It's a trade followed by the plan. So then the last trade, NZDCAD. If I go to NZDCAD, this was minus 0.5% trade. So if I go to the weekly, what I saw on the weekly chart was we had a very big impulsive driver. We are bullish on the weekly. We made here a kind of, yeah, 2 weekly bearish candle closes with then a bullish candle. So this was nice to see that we can have then that impulse, then some kind of relief, then back the impulse to go back to the upside after that weekly bullish candle close. So I went to the daily, and on the daily what I saw on NZDCAD was that inversion and shoulders. So we have had shoulder 1, had possible shoulder 2, but we went straight to the daily lows here where we could take a fake out. So we took here the fake out. So if I went to the 4-hour chart, then you can see my daily zone was still in that deceleration because I also drew here my 4-hour fake out. I adjusted it on the 4-hour and then it was aligning here, but it was still valid because we were in the daily zone and this is where the deceleration was formed. So what I saw was we had here our first candle, second candle was a blue candle close. So then we needed a third one, and then I could take my limit. I think I opened it manually because I was at my work, so my pips were a little bit above that I entered. So that's why I also just didn't cut on break even. Because yeah, we just had here our break-even point, and my entry could be possibly here sitting, like this around number to the upside, 25 maybe, so 25, and then we could go here already on break-even. So that's why this was a minus 0.5% trade. Also because I was also running minus 2% that week, and I took it with 0.5%. To not have that big losses that week. But yeah, I could go and break even if I didn't set market execution. Instead, I needed to do a limit, but I was at my work, so I was just looking at it and then I set it there. So yeah, this was the trade on NZDCAD and the last one. So yeah, I hope next week will be better. So I see you next week. Bye, everybody.